First up, taking a look at shares of Home Depot closing just above the flat line after the company saw sales fall 2% compared to a year ago, driven lower by a decrease in transaction growth. The company also reaffirming its guidance that it set last quarter, expecting a drop in sales and adjusted earnings for the full year as consumers remain cautious. The reason, though, why we're not seeing red on the screen is even though we did get that drop in same-store sales, it wasn't as big of a decline, Akiko, as the street had been bracing for. But you talk about the fact that consumers are under pressure. They're tightening their budgets. They're not as willing to spend on some of those larger ticket items. And a name like Home Depot, it's going to suffer a bit from the shift that we're seeing in consumer spending.
Yeah, I mean, it's worth noting, again, when you look at Home Depot, Lowe's is right in that camp as well. I mean, they have just seen such an incredible run up over the last 3 years that it's tough to match that when you consider what things are playing out right now. We did hear the retailers saying essentially they're not going to be raising prices anymore, but they are seeing the consumer turn a bit more cautious. To your point, Seana, maybe delaying some of those big ticket items. The DIY projects aren't happening anymore. That's been the trend for some time now. When you think about the professional builders, you know, they are still going to Home Depot as well, but some of those projects are being delayed out of concerns about rising rates. But also when you think about the home market, that the overall slowdown that we have seen there, that's really hit Home Depot in a way as well. So we're seeing that reflected in the numbers we got today. Now, checking in on the home builder sector as rising mortgage rates are taking the steam out of the market, sentiment for newly built homes dropped 6 points to 50 in August, according to the National Association of Home Builders. That is the first decline in 7 months and the lowest level we have seen since May, when sentiment first rose out of negative territory. When you think about what's happening in this space, it is very much sort of the similar storylines that we have been watching, Seana. It is about higher mortgage rates and seeing increasingly sellers remaining on the sidelines. You talk about buyers getting pushed higher in terms of prices because there's not enough inventory there as well. And that's leading to a broader slowdown, even as we see new construction taking shape to increase that inventory.
Yeah, certainly. And we're seeing some of that concern reflected within this index. But when you take a look at the outperformance of so many of these home builders since the start of the year, this is a group of stocks that has really been leading, one of the leaders of this rally. You had Lennar, D.R. Horton among the names that are up just about 40%. So yes, we are seeing some pressure across the industry today, but certainly when you take into account the role that some of these home builders are playing in the current market, Akiko, like you were saying, the fact that inventory is so tight, buyers who are still willing to buy in this higher mortgage rate environment, they're almost left with no choice but to opt for a new home. An application for mortgages to purchase new homes, that rose about 36% from a year ago, as we talk about some of these new homes growing their market share of the homes that are available and on the market right now. And also, in the 13F filings that we got out last night, Berkshire Hathaway, Warren Buffett's company there, disclosing that it added positions, new investments in D.R. Horton, in Lennar, and in NVR. So he, at least over the last couple of months, still sees some runway here for some of these home builders. All right, let's also take a look at shares of Lyft, higher today on news that its CEO David Risher bought 100,000 shares of the company. According to an SEC filing, the executive purchased the shares at $11.46 on Friday, potentially signaling good things to come for the ride share here. We're looking at a gain of nearly 4% in the stock today. And Akiko, the thought here is that an executive, if they go in and they buy the stock, they're very confident that that share price is going to rise. So that's why we're seeing a bit of a movement here to the upside. So we'll see whether or not some of these gains hold, because we know Lyft obviously lags far behind its biggest competitor, its only competitor, Uber, really, within this space, and has much room to improve in order to better compete with Uber.
Yeah, and Lyft needs a bit of that vote of confidence, right? So at least for today, we are seeing shares move higher. You could argue that things are starting to turn around for Lyft as well. Yes, they are not as diversified as Uber, as we like to talk about a lot, in terms of moving outside or expanding their tentacles beyond ride sharing, but we did see a stronger outlook for Q3. Last week when they reported, we also saw the number of active riders increasing, partly because of the aggressive pricing that they have done to try and compete from Uber, and that's brought revenue down, at least the average revenue for riders. But look, they have had a really tough go. It's not just the executive shakeup. It is about the competition with Uber having to have the incentives in place for the drivers, all of that leading to the declines we've seen for the company. So a new CEO coming in and buying 100,000 shares there, certainly at least a vote of confidence for today.
It is.